And we shall start.
Okay. Welcome to everyone, and thank you for joining us for today's webinar. My name is Lauren and I'm a part of the accounting team at VI Partners. During today's webinar, we'll be covering what you need to know in relation to JobKeeper version 2.0. We will provide you with the information that you need to determine, firstly, if you qualify for the next round of JobKeeper, and secondly, explaining your obligations and record keeping requirements so that you don't have any issues with the ATO down the track. We will also be explaining the new Victorian Government Grants that either have or will become available as a result of the extended lockdown. And then finally, we will be finishing off the webinar by covering off on some key considerations for you and your business as we come out of lockdown and your business starts reopening. It will be important as we get back to some sort of normality to adjust with the new environment that we find ourselves in. So questions, we will be taking some questions towards the end of the webinar, and we encourage you to put any questions that you may have into the chat function at the bottom of the page. Please also note that we will be putting links to various resources as well as having a recording of this webinar available on our website so you can watch it back at any point in time. Okay, so let's get started. We have Romeo Velado, who is one of the partners at our firm, and he will be taking you through today's important presentation. So over to you, Romeo.
Thanks, Lauren, and a big thank you to everyone for joining us today. I know that you're all busy, but I hope I can provide a bit of an insight as to JobKeeper and how it works for you guys. So as Lauren mentioned, what I want to cover off on today is just an explanation of JobKeeper and especially the extension, how it works and how you're going to qualify, providing you a quick overview of the government grants, and then just some things to consider as you're coming out of lockdown. I do apologise in advance if today's content is a little bit dry, but I don't think you'd expect anything more from an accountant anyway. So the last few months, especially the last 6 months for us accountants, has been an absolute nightmare with regards to keeping up with changes. I don't think there's ever been a period that I can remember, and I've been doing this for well over 25 years, and that's talking about my age there. As far as the amount of changes and updates that have had to happen and changes that have happened on the fly. Even today, there's been some further announcements about the government grants and how they will be treated. There are continual changes, and it is really frustrating from our point of view, especially when we're supposed to be guiding you guys as our clients. So as you're aware, the JobKeeper scheme has been extended. It was due to finish on the 27th of September, but it's now extended up until March next year. So the first thing to work out is whether or not you're eligible. So the criteria doesn't really change as much. You still needed to have been in operation as of the 1st of March 2020. So for all businesses, you actually need to be a trading business, and you can't be a business that just earns rental income or income from passive sources like dividends or something like that. And it had to be carrying on a business as of the 1st of March 2020. So even with this extension, that date is important. So if you started a business after the 1st of March, you will not qualify either for the original JobKeeper nor for this extension period. The other thing is that you needed to either have an eligible employee or an eligible business participant to qualify for JobKeeper. Now, just to explain, an eligible employee is either a full-time or part-time employee, and in some instances also a casual employee. The test with casuals, and there was a bit of drama about this at the start, was that they needed to be engaged by the business on a regular basis for 12 months up until the 1st of March. There has been a recent change, and this is something that you need to be aware of, is that there has been another test date, and it's now the 1st of July 2020. So if you're a business and you have casual employees and they started, say, 9 months prior to the 1st of March, they may now qualify for JobKeeper because they would satisfy the criteria up until the 1st of July. The other people that now come into the scheme as a result of the changes of the 1st of July would be someone that was maybe under 18 years of age as of the 1st of March, or any new employees that you've had to employ because of either turnover of staff or anything like that after the 1st of March. Importantly, the other thing to qualify for JobKeeper is that you needed to have experienced a downturn in turnover of at least 30%. Now, different to the old JobKeeper, and we'll call it the old JobKeeper for now, is that once you qualified, that was it, and you were in the whole JobKeeper system until the end, until the 27th of September. Under the extension, what will have to happen is that you will have to qualify for each extension period. And I've listed there on the table the individual extension periods. So the first one goes from the 28th of September to the 3rd of January, and then from the 4th of January to the 28th of March. Now, it is possible that you will qualify for one and not the other, or none at all, or both in some instances. The other thing to note is that if you weren't receiving JobKeeper in the past, but now as a result of the shutdown, you qualify because you've experienced a downturn in turnover, you can now enroll and get the JobKeeper payments. So with regards to turnover, there has been another change in relation to this. So previously you were able to use an estimate of turnover. So you can actually work out, and as long as it was reasonably done, you can work out an estimate of turnover for a period and then work out whether or not you can qualify for JobKeeper. That's now being cut out, and the only way that you can actually qualify for JobKeeper these days is on actual turnover. And it is looking historically, and it is looking at, rather than a 1 month period, it is looking at a 3 month period. So we're looking at, firstly, from the 1st of July to the 30th of September, having a look at your actual turnover for the 2020 year and comparing it to the 2019 financial year. And then the same thing will happen for the December quarter. So from the 1st of October through to the 31st of December, comparing the turnover for that quarter to last financial year. Now, effectively what you need to do is you need to work out what you're reporting on your BAS and use that as your income, if you like, to work out your turnover. Now, when I say looking at your BAS, you need to take off the GST that you're charging. So it is the GST exclusive amount that you're looking at. And you also are excluding any interest and JobKeeper or government grants from this. Importantly, if you are using record-keeping software, whatever that record-keeping software is, make sure that you are recording the right code against any JobKeeper or government grant payments. We have seen already a lot of our clients that are using the GST-free code instead. That GST-free code will still bring that income into the business activity statement, and therefore, when you're running a report, it may alter what you're looking at. The other important note is that if you've sold any assets over the last 3 months, for example, or even in the 3 month period in the September quarter last financial year, so whether or not you've sold a car or whether or not you've sold equipment associated with your business, that will be considered for your turnover. So that actually can muck you up if you've sold it in the last 3 months, and it may mean that you are ineligible. So just keep an eye on that. If you're not registered for GST, so I mean, I've just talked about how a business looks at their turnover test using a BAS. If you're not registered for GST, then you would just typically look at what your income was for that period and what you've physically received. And that's businesses that have a turnover less than $75,000. The other important thing to note is that there is now there isn't a flat rate that is paid to employees for JobKeeper. It is a 2-tier system. So it's a tier 1 and tier 2, obviously. And that is dependent upon how many hours the employee works. So effectively, to qualify for a tier 1 rate, an employee needed to have worked for at least 80 hours in a 4-week period prior to either the 1st of March or the 1st of July 2020. So you would need to look at either pay slips or timesheets or some sort of other evidence. And it's important that you document how you've arrived at this, because there is a big difference between the two rates. The Tier 2 rate has now been introduced, I suppose, to differentiate between the full-timers or the people that are working pretty consistently to the people that were only working a few hours a week and then were unfairly receiving the $1,500 payment. And when I say unfairly, I suppose it depends on who you're talking about. If you were the recipient, it wouldn't have been very unfair at all. The other thing to consider is that if you're an eligible business participant, and I just need to clarify, an eligible business participant would be, say, an owner of a business that wasn't drawing a wage, or someone that has been nominated by a business that was actively engaged in the business. So it could be a part of a trust or something like that, but they were working in the business. The test period for them is February 2020. There is no other option for testing as far as prior to July. Now, the issue here is going to be documenting how you have arrived at that, because in most instances, the reality is that most business owners don't document how many hours they've worked in a business. But the tax office is going to, if they do ask for it, they will ask for evidence as to how you work that out. So it's important that you document it. So whether it be going back and having a look at your diary and documenting that via a timesheet or some other evidence in a spreadsheet, it is important that you do that. So following on from that, I'll just explain the two tiers as far as the rates are concerned. So just as a reminder, up until Sunday, the payment rate was $1,500 and it was a flat rate per fortnight, no matter who the employee was. It has now changed, and depending upon when the payment is made, so up until the 3rd of January, from now up until the 3rd of January, the Tier 1 rate, which is the high rate, is at $1,200 a fortnight, and then the Tier 2 rate is at $750 a fortnight. From the 4th of January, that drops down again to $1,000 and then $650. So it is important that you keep note of this, and it is important that you document how you arrived at which employees qualify under each tier. Now, the way that you are going to let the tax office know about this is via single touch payroll. Now, I'm assuming that most employers, if they do have employees, would be using single touch payroll as of today. If that's the case, all you would need to do is log into your payroll software and select which tier is applicable to each employee. If you don't have single touch payroll software, you will need to contact the tax office and let them know which employees you have and then which employees will be receiving each tier as far as the payment rate is concerned. It is important because when you do the declaration, it will impact the amount that you will be receiving on behalf of each employee. So next steps. So the first thing you need to do is sit down and work out whether or not you'll actually qualify for JobKeeper under the new extension. So as of tomorrow, I guess, you can work out what your turnover was for the last 3 months, have a look at it, work out what needs to be included, if there's anything that needs to be taken out. Again, reminder, just have a look at your, if you're keeping electronic records, have a look at the GST codes that have been entered in against it and make sure that you do qualify. If you've already been receiving JobKeeper up until now, there's no need to do anything else. You don't need to re-enroll. You also don't need to let your employees, if you have been using JobKeeper, you don't have to notify them. They don't have to fill out any additional forms. It will just continue on. The only thing that you will need to do is update your STP software and let the tax office know which tier applies to each individual employee. If this is the first time that you will qualify for JobKeeper, then you need to enroll. You also then need to let the tax office know which employees will qualify for JobKeeper and which payment rates will apply. It is also important, regardless of which situation you're in, to let the employee know which rate that they will be paid. They may have an expectation they will be paid one tier, but then the other tier applies to them. You need to let them know and document the fact that you've let them know. So either an email or some sort of letter just to let the employee know that they will continue to receive JobKeeper, and this is the tier that they will be paid at for each extension period, right? Finally, you will need to lodge a monthly declaration by the 14th of each month. So for the next extension period, the first declaration will be due at the end of October. So by the 14th of November, you'll need to lodge a declaration, and that declaration will include which employees are going to be paid, or which employees you're claiming the JobKeeper for, sorry, your turnover, and also whether or not any employees are no longer eligible. This is really important that you do this, and you must do this by the 14th. It is really difficult to get extensions. We've experienced this on a number of occasions, so just be careful and be mindful that it must be done by the due date. So just in summary with regards to JobKeeper extension, you don't need to enroll if you've already receiving your payments. You don't need to reassess employee eligibility. Once they're in, and it's only up to you to remove an employee if they are no longer employed by you. If you find that you no longer qualify for JobKeeper, you don't need to let the tax office know. The way that you stop receiving JobKeeper payments is just simply stopping the monthly declarations, and then that will cease you and remove you from the system. Again, I'll just reinforce, it is important to keep records. The tax office have mentioned on a number of occasions that they will increase their audit activity over the coming months in relation to JobKeeper. There are unfortunately businesses out there that have claimed JobKeeper that weren't entitled to it. So please document how you've worked out your decline in turnover. Document how you've worked out which employees qualify, which employees don't qualify, especially with regards to casual employees. It's really important. And again, finally, if you get stuck with any of this, let us know. We're here to help you. If you have any questions, or if you need any further information about any of this, or you're still uncertain about anything, just let us know. We are here to help you, and we are here to help you guide through this JobKeeper extension. The other important announcement that was made a few weeks ago by the Victorian Government is an extension to their business support. They announced a number of measures, and unfortunately, not all of these measures are available as yet. I would have thought that by now that all of these grants would have been open. I'm not sure what the delay is, but I've even checked about an hour ago. Unfortunately, these grants are not all available. The first grant, though, that is available is the Business Support Fund Extension third round. Now, this follows on from previous grants that have been available. It is an extension, however, you do have to apply for this separately. Applications are open, and effectively you need to be carrying on a business in Victoria to qualify. Most importantly, and this has been a change that's been introduced for this round of support, it hasn't applied to any other support options, is that it is now only available to eligible sectors. It is not across the board availability to all businesses. Now, when you registered for your ABN and when you were allocated an ABN, there would have been an industry code, which is referred to as an ANZI code, and that's an Australian New Zealand code. And that is your code that's been allocated to your ABN, and it depicts the type of industry that you are operating in. There is a list that's been published by the Victorian Government on their website, and we've also put it on our website as well, that lists all the codes that are eligible for this government grant. It is important that you check on the Australian Business Register as to what your ANZI code is. The way you would do that is, hopefully you guys would have already registered a MyGov account. And if you don't, unfortunately, you'll probably have to contact us to check what your ANZI code is. It is very important. We had it recently, just in the last few days, a client of ours that effectively was listed as a baker, and that's what they do. They bake bread, but different to a normal bakery down the road, they supply to the restaurant and catering industry, and especially their clients are situated at Melbourne Airport. We've had to reclassify them and change their industry code so that they meet the criteria, because they're effectively a wholesaler, not a bakery. So in essence, they would be a bakery, but we've had to change it. If we didn't do that, they would not meet the criteria and therefore not be eligible for this grant. So it is important that you do check this before you put your application in. The other criteria is that you need to be a participant in the JobKeeper scheme. So if you're not receiving JobKeeper, you can't get this business support fund. You have to have at least one employee. If you're carrying on a business and you've only got an eligible business participant, you will not qualify. You also need to have work cover insurance and be registered for work cover. The work cover employer number will also be used as part of the application. Other criteria are that your turnover or your payroll, has to be less than $10 million for the 2019-20 financial year. And the way that they would check this would be through your work cover certification for last year, if you're not registered for payroll tax. You need to be registered for GST. So any small businesses that maybe have a turnover less than $75,000, because that is the GST threshold, will not qualify. You need to be registered for GST, and you also need to have a registered business or company name with ASIC. So unless you meet all of these criteria, you will not get this. So please check that you actually can do all of these, or you actually meet all these criteria before you put your application in. And if any changes need to be made, do so before you put the application in. The amounts that are available under this business support fund are either go from $10,000 up to $20,000, and it just depends on the payroll. So if your payroll is less than $650,000, it's $10,000. If it's between $650,000 and $3 million, it's $15,000. And then it's $20,000 for payroll above $3 million, but below $10 million annually. I'll just bring up another thing here, and this is to do with audit activity. Again, the Victorian Government, and they don't really publicise this, but they have mentioned on a few occasions that they will be reviewing these grants as to whether or not businesses were actually eligible later on, and whether or not these funds are being used for eligible purposes. You need to be aware that these funds need to be used to meet business costs. So whether it be helping paying salaries, paying rent, utilities, whatever it may be, they need to be used for paying business costs. So somehow, if you can document this, this would be great and would help if just in case you are audited. The next grant which is available to effectively businesses that have a liquor license. Now, a word of caution, you will not be able to apply for this grant in addition to the business support fund. So you have to have a look at whether or not you would be better off claiming a grant under this fund or under the business support fund. Now, on the table there, you can see exactly how much is available. Unfortunately, this is not open yet, and I'm not sure why it's not open, considering that you can either claim for one or the other. But it may be more lucrative to apply for this business grant rather than the business support fund. So just be wary of it. If you've already put an application under the other one and you think that you may be better off under this, it may be worthwhile contacting the Victorian Government and finding out whether or not you can actually cancel your original application. There are a few other grants that have been made available. One of them is a sole trader support fund. Now, there's been a lot of talk about sole traders and the fact that they've missed out. The other, I suppose, group that's missed out as well is businesses that are operating as partnerships. There hasn't been any clarity on that as yet. The sole trader support fund is open. The catch with this one, though, is that you have to be operating from a commercial premises. If you're operating a business at home, so whether or not you've got a tip truck business or something like that, if you're operating a business from home, you cannot make a claim for this. So you can't have employees and you need to be operating over commercial premises. Keep in mind that as you go through and you complete the application, you will need to provide evidence that you are operating from a commercial premises. So please be mindful of that and just make sure you've got all the evidence in place before you put your application in. The other thing that was announced by the Victorian Government is some business adaptation packages. Now, again, these haven't been made readily available, and they're for things like allowing for CBD businesses to convert some zones or some areas within their business to hospitality zones, so whether it be rooftops or courtyards. All hospitality business, so not just those operating the CBD, but all businesses throughout Victoria, to apply for a $5,000 grant to adopt outdoor dining. Now, this is a push by the state government as things get back to normal to allow for outdoor dining. So this $5,000 is to be used for whether it be purchasing chairs for and tables for outside or hiring equipment. So just be mindful of that, and I guess we'll let everyone know as these grants become available. And then finally, there's a voucher program to help small businesses and sole traders adopt to technology. Again, full details haven't been released, but we'll let you know as soon as possible. A few other things that have been allowed for by the Victorian Government as far as business support. The first one is that they're allowing businesses to opt not to pay their payroll tax, if that's the case, until next financial year. So if the annual payroll is between $650,000 and $10 million, they can opt to pay their payroll tax in the 2021-22 financial year. This is okay, but it's not a waiver. It is simply a deferral. So all that is happening is that you will need to make this payment at some future point in time. You need to be mindful of future cash flow considerations, right? So in making that decision. And the other thing to decide upon is that you may miss out on a tax deduction by not making the payment. So if you're reporting your income tax liabilities on a cash basis and you haven't paid your payroll tax, by the 30th of June next year, you'll miss out on that tax deduction. So you just need to consider that as far as the whole package is concerned. And the final thing that the Victoria Government is allowed for is a waiver of licence fees. And that is an actual waiver for this financial year. Again, if you need any assistance with any of these, please contact our office and let us know, and we are here to help you. The last thing I wanted to talk about was just I just want to make a few comments as to some things that you need to think about with your business as you're coming out, or I suppose as restrictions are easing over the next coming weeks or months or whatever that may be. So as we're coming back to some sort of normality. The first thing to work out is cash flow planning. Now, most, if not all businesses should have some sort of cash flow plan in place. Have an idea as to what cash they need within their business. Now, the whole last 6 months has turned everything upside down. There is no normality anymore. There's no consistency. The one thing that is reasonably consistent is expenditure. So you should be able to go through and document what your expenses are going to be or what your cash flow needs are going to be on a regular basis, like on a monthly basis for the next 6 to 12 months. And I would encourage everyone to actually document this, whether it be in an Excel spreadsheet. It doesn't have to be anything fancy or in any fancy format. A simple Excel spreadsheet, even handwritten if you have to. These are the costs I would need to meet for the next few months. And then what you need to do is you need to work out how much money is coming in. And then decide if there's enough cash available. So I've just put a comment in there when I read this in an article a few days ago. So a war chest of cash is not a nice to have, but it's a must have. Now this is always relevant. And if you have a look at the reaction from big business 6 months ago when COVID happened, everyone went to bolster their balance sheet. So they raised capital, they stopped spending money, they stopped dividends where possible. It's about building a bit of a war chest and making sure that there's enough money there for everyone and to make sure that your business continues. So make sure you've got that cash flow plan and make sure it's documented for yourself and understand it. Because when JobKeeper stops and when the government grants stop, you need to make sure that you've got enough money there. So you've got to work out whether or not you've got access to cash. So, you know, whether or not you've got money in the bank, whether or not you've got access to a line of credit or something like that from the bank. It is important that you understand what your cash flow needs are. Another thing that we've been working with some clients with is just asking simply for a better interest rate. If you have loans, what we've found is that banks don't offer specials to their existing customers. They offer specials to new customers. So all you would need to do is have a look at who you bank with, go onto their website and work out whether or not your interest rate matches what the current offered interest rate is. In some instances, we found that our clients have been at least 1% better off. And if you work it out, 1% on $100,000 is $1,000 difference in cash outflow for your business and for your own personal circumstances. All you need to do is call the bank. You don't need to do anything else. You wouldn't need to apply for a new loan. I mean, if you wanted to take it further, you can have a look at other banks and have a look at what interest rates they're offering, but you can start with your own bank and just ask for a better deal. In most instances, they will assist. The other thing you can do with your bank is, if there are cash flow issues, or if you perceive that there may be some cash flow problems coming up, is ask for an extension to these loan repayment deferrals. If you don't have to make the loan repayment right now, maybe there is something that you can do to just defer it by a little bit. It is important that you do that. Your tax obligations are another thing. As part of your cash flow planning, if you find that it's difficult to keep up to date with your taxation obligations, whether it be your BAS, because the cash flow boost also stops now. The government grants will stop soon. If you cannot pay for your business activity statement, if you have income tax payments that are coming up or PAYG installments coming up, it's important to get on the front foot and contact the tax office. They will soon start their debt collection process again. They will be contacting people and asking for their money. If you get on the front foot and you contact the tax office first, they will, and they have quite freely entertained payment arrangements, and quite generous payment arrangements as well. So it is important that you do that. The next thing is, if you do operate out of a commercial premises, that you should be receiving rental relief from your landlord. Especially if you have JobKeeper, they have to provide you rental relief. There is a commercial tenancies code that everyone has to abide by, and they have to provide you some sort of relief as far as a waiver, and then also a deferral of payment. This is important in also managing your cash flow and also making sure that you're managing your business expenses today. Have a chat to your landlord. If they're not willing, there is ways to go about it, and speak to your solicitor if you need to get them involved as far as getting some sort of arbitration. The other thing I just want to make sure with regards to cash flow is, yes, it's great to defer all your payments as much as you can, but one thing you shouldn't be deferring is superannuation guarantee obligations for your employees. Now, if you're paying JobKeeper to your employees and they're receiving JobKeeper top-up payments, you don't necessarily have to pay superannuation guarantee on those JobKeeper top-ups. However, if you are paying your employees normal rates and they are working normal hours, you do need to continue making superannuation guarantee payments on behalf of them. We've seen some businesses that say, well, I'll pay this later on. It's due by the 28th at the end of each quarter. If you don't pay it by that date, there are penalties, and also you will lose out on the tax deduction. It's important that you keep up to date with these payments and make sure they're paid on time. The tax office keeps an eye on this now through single touch payroll. This is one of the reasons they've introduced this whole program. So please make sure that you're on top of this. The next bit I want to talk about, and the final piece before I shut up and then let some questions come through, is profit planning. So what I would ask everyone to think about with their business is having some sort of plan for the next 6 to 12 months. Now, if there has been a downturn in revenue, it's not going to automatically come back. You may be in one of those industry or one of those sectors that it may come back as soon as you open, and that's fantastic, great. But it's not going to happen for every single business. So you need to start thinking about how you're going to be making this money back. How are you going to drive your sales back up? And there are a number of ways that you would do it. And then you need to look at your own business and come up with some strategies yourselves to make that happen. There's effectively 3 ways to increase your revenue, right? So if you have a look at it, it's either increasing prices, increasing the number of customers you have, or selling more to your existing customers. They're the 3 basic principles. Write those down and come up with strategies around each of those. You may not be able to do all of them at once. You may not be able to increase your prices because the market forces won't allow it, but you might be able to do the other things. You might be able to market your business better. You might be able to market your services and your goods better. just be mindful that people are becoming picky and you don't want to be sacrificing the quality of your goods and services. So what is your strategy? Document it if you can. Come up with an action plan. A good thing to do right now, as things are opening up and restrictions are easing and we're coming back to some sort of normality as well, is to have a detailed to-do list. What are you going to be doing over the next 3, 6, 12 months for your business? Make a list, and it could be as big as you want. However, what you need to focus on immediately is what's going to give you the biggest bang for your buck today. So prioritize. Make sure that you're not spending time on things that may help you in 12 months' time, where you can focus on something that's really important and can work for you today. That's what you need to be focusing on. The other thing is, don't try and do too many things at once. You're not going to be able to do everything within a week or 2 weeks. Break it down, focus on the important things, and do it step by step. Finally, and as part of your profit planning, is making sure that you've reviewed all of your costs. Have a look at your business expenses and make sure that you're doing the best you can with each one. Are you getting value for the money that you're spending? Have you got recurring expenses that maybe you don't need to be spending? So whether it be subscriptions, whether it be looking at reviewing your telephone bills or anything like that. It's important that you take the time over the next 3 to 6 months. Revenue is going to be unsteady. We're not sure what it's going to look like. We're not sure what the environment is going to be. So it is important that you review all of these things and you keep on top of it as much as you can. So that pretty much covers off everything that I wanted to talk about. And I just wanted to open up to questions. I'm not sure if any questions have come through. So Lauren, I'm not sure if there's anything that's come through as yet.
Yeah, we do. We have a fair few questions that have come through that I think the answers will benefit a lot of people in the chat and as the attendees. So if you're a sole trader with no employees, do you still qualify for JobKeeper 2.0?
So if you're a sole trader?
Yes, with no employees, just yourself.
Yeah, so that's correct. So you will qualify for JobKeeper. You don't have to have employees for JobKeeper. As a sole trader, same thing as a business participant. As long as you are actively involved in your business, you'll be able to get some sort of JobKeeper payment. The only thing I'm going to comment on with regards to that is to make sure that you document the amount of hours to work out how you're going to receive that payment.
And that probably feeds into our next question that we've got. As an eligible business participant, what sort of proof of hours worked will the ATO accept? And do we need to go back and backtrack this evidence?
The short answer is I don't know, because the tax office haven't released anything concrete to say that this is what they will or won't accept. The only thing that we could recommend is do the best that you can. We would, like I mentioned before, it's probably a good thing that you work out how many hours that you do work in your business on average. Most business owners would work 80 hours in a month easy, if not a lot more. If you're a passive owner, then it may be difficult, but if you can effectively show evidence that you're turning up to work each day, you're involved in all the decision-making of the business, I think you should be okay. What I would do is I would do some type of declaration to say, okay, this is how many hours I work typically on a weekly basis, and this is how many hours I worked in the month of February. Sign off on that and just keep it in your records. You don't need to submit anything to the tax office, but you should have this documented just in case.
Great. And for JobKeeper 2.0, can we choose to report on an accrual or a cash basis like we did in JobKeeper 1, or do we need to use the same method that we report our GST on?
Unfortunately, you can't choose. It's only what you submit on your BAS. So if you are registered for GST purposes on a cash basis, then that is how you report. So it gives some clarity to the tax office here. So depending upon how you've submitted BASs in the past, you can't just change your method. The accrual method, you could choose, you could chop and change if it more accurately, reflected your actual trading, I suppose, the environment at the time. But under this extension, it is only what is submitted on your activity statement.
And last question that we've got come through, if my business does not qualify for JobKeeper extension period 1, but then experiences a downturn of 30% later down the track, will we be able to enrol for the JobKeeper extension period number 2?
Yes, you will. So at this stage, what we understand is that there would not be any restriction on you enrolling at a later date. Again, as I mentioned, this is an evolving situation. They are making changes to it on a regular basis. But from what we understand today, if you do not qualify for the first extension, but you then experience a downturn for the December quarter, you will be able to register.
Great. That's all the questions that we've got for today, Romeo. I'm sure if anyone has any more, they can email them through and we can get back to you at a later point in time.
Okay. So I'd just like to thank everyone again for attending, and hopefully I was able to provide a bit of an oversight. And again, if there's anything that we can do to assist you with any of this, so whether it be for JobKeeper, for the government grants, or even to assist you with some of the cash flow planning and even planning for your business, just let us know and we'll help you out as much as we can. Thank you.